right, welcome back, everybody. John Caruso here, RJO Futures, September 14th, doing a look in on the market. We just saw the PPI data come out. We did see core actually accelerate to 7.3%, while we did see a headline year-over-year number actually decelerate one tenth of a percent here to 8.7. So market's relatively stable right now. We're hanging around yesterday's lows. Obviously, recapping yesterday, we were down 4.5% in the S&P 500, down 5.2% in the Nasdaq, taking the year-to-date losses in the S&P 500 to down 17% and down 26% in the Nasdaq. Interestingly enough, we do have some implied volatility discounts this morning of 11% on the S&P and minus 10% on the Nasdaq. So what does that tell me? That tells me that market participants are taking a shot, pulling off some of their hedges down here and getting longer of this market. So you want to be very careful, because that is a classic contra indicator for markets. Taking a look elsewhere on the board, very strong day yesterday in the U.S. dollar on the risk off period. Dollar, I'm constructive up to 110.62. That's where we think we could start to run into a little static up there. Taking a look elsewhere, crude oil, I'm constructive in crude oil to 92 potentially. It is still bearish trend, so you got to be mindful that you are trading a very bearish trend of the market. I do think crude oil prices going out to January, February are going to see more downside, but over the very near term, I'm constructive in crude to 92. I'm not taking a position there. It is still a net consensus long position. There's 262,000 contracts positioned on the long side. Some of those longs might have to be squeezed a little bit more before you see crude oil prices finally bottom. Crude oil yesterday did bounce on the news that Washington, D.C. is talking about refilling the SPR reserves. Naturally, they put 180 million barrels of oil onto the global market over the last 6 months. Now they're going to start talking about withdrawing that, filling the tanks back up. Naturally, less supply, prices move up. That's exactly what we saw. So that's going to present an interesting dichotomy going forward. We've already got historically tight supplies in the crude oil market. Okay, you've got a very explosive geopolitical backdrop, especially heading into the European winter here. And now the United States is talking about pulling more barrels off the market. The barrels that they put on the market, they're taking them off, which is only going to create more tightness in the market. So crude oil, it's got a very, very bullish backdrop fundamentally. But a couple things that we do know is Europe is barreling into a recession. We could see some demand destruction from that regard. The United States, we have the recession call on going out into next year. We do think that we are moving into recession here in the United States. So if you do see that demand destruction, will it be enough to offset the tight supplies in the market? So going to be very interesting to watch how that trades. I remain constructive to 92 over the near term. I'm going to wait and see. I'm not doing a lot in oil right now. If it does break back to bullish trend, I will entertain a long side trade, but we've got a ways to go before we see bullish trend in crude oil. Gold, 1716, kind of bouncing a little bit here this morning. It likes the fact that yields came in just a touch here, so you get a little bit of a pop here in gold. I'm constructive in gold as long as we can hold above 1686. That's the key swing area. I've said that time and time again. 1686 goes out, all bets are off. We can see 1630 in crude, in the gold market. So that's all I have for you here today. Best of luck to everybody out there. We'll catch you back here tomorrow.